right. Hey, everyone. This is Kirk here again at Option Alpha. Thank you so much for joining here for episode number 8. We are going to be talking about options trading 2.0, something that we've kind of, I don't know, danced around for a little bit here now in the last couple episodes. But I really wanted to give you guys a lot of examples of how we can do this, kind of go in and start potentially making some trades here today and starting to figure out, like, what does this mean? How should you think about trading moving forward? So got some slides, as always, that I want to go through with you all. But I think the most important thing is just really trying to distinguish here as traders, like what this older way of trading used to be, this, what we call at Option Alpha, like options trading 1.0, like the old way we used to do it. And then now how we should think about trading moving forward, which is options trading 2.0 is like a new way of doing it using bots and automation. So that's what we're going to go through here today. I think that this will be helpful. As always, if you have any questions or comments or have anything that you want to talk about or feedback or whatever, please let me know. Add them in the chat, add them in the comments. Be happy to do that. So let's bring up these slides here for us. Okay, so what we're going to do is, and this is part of a presentation that I gave actually just a couple of weeks ago in Florida, but I think the most relevant part of it, because I don't want to do the whole thing all over again, but the most relevant part of it, I think, is just this distinguishing between options trading 1.0 and options trading 2.0, because this is usually what traders do. And so here's a chart of the S&P, and you can see it doesn't matter what the S&P is, right? So it's meaningless. It could be any stock. You could have technicals on it. You could not have technicals on it, whatever the case is. But 99% of traders right now, what you do is you come into the market, you pull up a stock chart, right? And you start figuring out, what do I want to do, right? Like, it's like you're like walking into the proverbial trading store and you're going, okay, what can I do? Am I bearish? Am I bullish? Do these technical indicators kind of show me which way I am? Like if I'm more bullish or more bearish, right? Everyone do that, right? So let's just say, for the sake of argument, you're bearish, right? The Fed speaking today, you don't know, your market's been up for a while, so you're bearish. So what do you do now? Well, now what people do is they come in and they pull up an option chain. So if you pull up an option chain on SPY now, and this is what traders will do all the time, is they'll pull up an option chain on SPY and they'll look at this option chain and go, now what? Like, what do I do now? So I know I'm bearish on SPY, but now I've got this huge list of potential things to trade. What expiration do I trade? You can see in SPY, I mean, there's expirations that go 1 day, 0 days. And this was taken a couple of days ago, like a couple of weeks ago, like screenshot wise. So don't forget the dates, but like you can just see, you could do 0 days. You could do 1 day, something that expires in 3 days, 5, 10, 30, 40, 50, 60, 100, 200 days out. What do you choose? And so this is the problem with that traders have, is like, A, you got to remember to come in here. And B, you have to have an opinion on the market one way or another, right? So now you're subjectively interjecting your opinion on the market. And then now you have to come in here, see, you got to choose an actual expiration. Like, how far out do I go? Somebody says 30 days. Is 30 days appropriate? Somebody says 0 DTEs are the best, right? I don't know. Is 0 DTEs appropriate? Is that the best trading opportunity right now? How do you know? How do you even know if that's the best trading opportunity right now, right? So you just pick something arbitrary. So let's just pick 7 days to expiration, okay? So you pick 7 days. Now what you have to do is you have to come in here and you have to choose the actual strikes. So you've already had to choose the direction. You've already had to choose the stock, the ticker. You've had to choose the expiration. Now you're having to choose the actual strikes themselves. You have to physically choose, do I go with the 30 delta? Why? Why go with the 30 delta? Well, because somebody said the 30 delta is the best. Well, okay. Well, is it really the best? Is it a 30 delta truly the actual best trade? Maybe a 15, maybe a 10, maybe a 25, maybe a 50 right now. Like, if you're not actually doing this type of math and calculations, you're just subjectively picking. You're just arbitrarily picking. You're just kind of whimsically going through this, going, I think I should go with this because somebody else said this, or I think I should go with that because somebody said it. And all we end up doing is, in the old model, options trading 1.0, is we start following what other people say we should do and start thinking like, I don't know, I guess I heard somebody say a 30 delta or 15 delta, so I'm going to go with that, right? So let's say you choose the 15 delta, whatever it is, and you bring up a trade. And so in this case, we're going to sell the 521 call, and we're going to buy the 523 call. Why? Because we don't know. We're just arbitrarily picking things out of a hat that we heard people say, because that's how traders typically start working through trades, is they start arbitrarily picking stuff. And so now we pick this trade, and you know what? This trade has an 83% probability of profit. So now we say to ourselves, yes, I got it. This is a high probability trade. This is awesome. I'm going to win 83% of the time. You tell your husband, you tell your wife, you tell your significant other, sell the house, sell the car, mortgage everything. Like everything goes on Facebook Marketplace. We're putting it into this trade, right? Because now you think you found the Holy Grail. And while that information undoubtedly is helpful, it's helpful to know if you have a probability of profit above 50% or lower than 50%, obviously doesn't tell you the full story. It can't tell you the full story because that's not the full story for this trade. The probability of profit has nothing to do with the actual risk and reward that you're going to take on this. Like when you win, are you making enough money to cover the times that you lose? That's what we talked about in some of the earlier episodes here, where we talked about, expected value and calculating alpha and things like this. Like, are you covering the risk and reward of the trades you're actually taking? So the problem here is that if you get into trades like this and you start working through trades like this, where you're physically going in and finding the trade and you're physically walking into the market and you're physically choosing it, you are basically doing what Blockbuster used to do in an analogous way for the movie industry. It's like, do you guys remember Blockbuster, where you would have to, if you wanted to rent a movie, you'd have to drive to I remember doing this. Like you'd have to drive to Blockbuster, find the movie, hope it was available, right? On a 2-day rental or an overnight rental, rent the movie, take it home, put it in the VCR, actually watch it, then rewind it and drive it back to now there's Netflix, right? There's a more efficient and faster way to do this. And now if you wanted to look at all the movies that are available, you literally do it with your two thumbs, right? And you could see all the movies that are available, watch one for 10 seconds, watch another one for 10 seconds and go back, right? And so what you're doing now as a trader, if you're doing options trading 1.0, which is what 99% of people are doing, is they look at a stock chart, pull up an option chain, randomly choose some expirations and strike prices, pull up a trade, check a few things, hope and kind of pray that it works out. You're basically Blockbuster. Like you're going to die. Eventually it's going to happen. Like you're not going to evolve in this industry. It's just the reality of it, right? Because the problem is that in all cases, this ends up being your trading plan. Your trading plan looks like this. And don't tell me it doesn't, because I used to be there too. Like if somebody asked to see my trading plan, what I would generally do is I'd say, listen, okay, here's what I need you to do. I need you to spend a couple of minutes with me. Let's, I need to light a cigarette or something. Like it's going to sound crazy, but this is my trading plan. I got all these moving parts, but you don't have an actual trading plan in place. You have nothing you're actually looking to accomplish. There's no requirements. There's no settings. There's no criteria. There's no position sizing, no risk management, no nothing. That is options trading 1.0. That's what most people have been conditioned to do because, frankly, there was nothing better else out there that could help solve some of these things. So you're conditioned to do that, essentially. That's what you were conditioned to do. And so the problem ends up being, and this is where I think really stems for a lot of traders, and maybe this kind of speaks to what you're thinking about too. If it does, let us know in the comments or whatever. But the problem is that when you trade, you're using two parts of your mind, essentially, like two parts of your brain. One side I just call the mind. And the mind side is the side that we want to keep. This is actually the good side. This is the side that we do really well at as investors, as traders, as capital allocators. We're great at the mind, which is market intelligence and nuanced decision making. Like that's what we do good at. Computers can never do that better than we can do it. We have that intellect in our brains. It's logical, it's rational, it's strategic. Because I bet that everyone that goes out there and starts trading, you don't come into this illogical, irrational, non-strategic. You're trying to be strategic. You're trying to work with all the tools that you got. Like you have technicals, you got this, you got that. Like you're trying to put it all together. You're trying to fit all of these different pieces together into this puzzle. Because that's the side of your brain that does really, really well. This is the logical, rational, strategic side. The problem is that once you have a trading strategy, you have something you want to go after, you have an opinion on the market, whatever the case is, you walk your beautiful, awesome trading strategy over to the other side. And the other side is called the fool. Now, the fool is the other side that takes care of all the management and execution of a strategy. And this is the problem for traders. Is like we do really well with our mind. We pick a strategy. We know what's going on in the market. We know like the Fed speaking and the market's up and interest rates or whatever, like we do that good. And then we give the strategy. We say, all right, fool, go ahead and execute it. Now, look, the fool is us. But the problem is that we are also equally, as humans, just who we are as creatures, we are frequently oblivious, overestimators, and luck seekers. And so when you let the fool take over control of executing a strategy, of managing a position, of having to remember rules and requirements and check things and do data and do calculations, it's never going to work because we're constantly inconsistent, we're brittle and susceptible. Right? It's just who we are. Like it's innate to being a human is that we have this as part of us. We can't change this, right? And so oftentimes traders will look like this, right? You'll have a bad trade and tell me you've been there. If you haven't been here before, if this has never been you at some point, this was me. I did this with Chipotle for sure. Okay, I had a Chipotle trade that I held on to way too long. I don't even eat burritos anymore because I can't even do it. I don't even go to Chipotle. We go there, I don't eat, seriously. So you had that bad trade that you're still hoping turns around. That's what happens is like we become so fixated on the things that we think we can control that we miss everything else. We completely miss everything else and we just can't do it. Our brains are not capable of doing it. So here's another one too. This is a really good one, right? Or like I always tell people too, like our brains are so susceptible that even little gimmicky things like this can confuse you. If you look at this right now and you see these things, this guy's saying there's 4, he's saying no, there's 3. You could see that, in either case, there could be 3 or 4. You have no clue. So I share this with people a lot because the reality is if you look at this, and if I say to you, like, what do you see on a stock chart? 5 people might say they see a rounding top, and 10 people might say they see a Head and Shoulders. And 5 other people might say, no, it's not a Head and Shoulders. It's an ascending triangle within a whatever. Like you have no idea what you actually see. And what you see is maybe not what somebody else sees. So there's no way you can consistently make accurate judgments of what's going on. You might see something different. Even just changing the color of prices can influence your psychology around where the market or where you think the market goes. And here's another good one. I like doing this one too, where you can actually see this, but are A and B the same color? So right here, are A and B the same color? A lot of people would say, no, they're not the same color. They actually are. Look at that. A and B are actually the same color. But just like the fact that it has a shadow on that cylinder can change us. Or this one here where like, is the bottom and the top of these 2 squares, are they the same color? You'd be like, no way, right? But the middle part obscures the fact that they are. So if you actually like put your finger right in front of there, you could do this on the screen if you want to, but put your finger right in front of the middle part of those 2 and you'll actually see it. I'm doing it right now. Like it's crazy. You can see it. Or if you've seen this study before, a lot of people have seen this. You probably have seen this before, where they asked kids, they did this study where they had played a video for kids, and they asked the kids to count all the times that these other kids in the video were passing the basketball back and forth, right? So all the kids are fixated on this video, watching the other kids pass this basketball back and forth. And the objective of it was count the number of times that they passed the basketball. Well, all the kids got it right, or most of the kids got it right, or whatever the case was. Like 90% of them got it right. But what they missed is they missed that during the video, they walked literally a guy in a gorilla suit through the middle of the screen, and nobody saw it. And I'm going to be honest, when I did this, because it's stuck with me forever, I remember doing this. I think it was in high school, elementary school. I remember watching this video. I completely missed it too, because I was only fixated on the basketballs that I was counting. And so the problem, the reason I'm telling you this is because when you are fixated on just finding your one trade that you always do, your 30 delta, 30 day, blah, 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 what interchange, whatever you do, you completely miss all the opportunities that are passing you by because you're just fixated on that thing. It's like, I'm just going to trade what I trade. I have no idea what's going on, because you can't, because we as humans can't do that. Like we have limited attention spans. If you tell us to count basketballs, we're going to count basketballs. If you tell us to go find a 30 delta option at 30 days, we're going to go find it. But that doesn't mean it's the best one. In fact, potentially rarely it's the best one, right? And so what we need to realize is that when we look at trades like this, right, that's pulling up all these numbers, like there has to be something that tells us this trade is a good trade versus bad trade. And it's not all here. one, all that information is not here. It doesn't tell us if it has any quantifiable edge or not. But then two, like the process of getting here was very clunky and painful and like error prone. Like if you don't wake up and log in, you can't trade, right? So if you're manually trading, options trading 1.0 style, if you don't wake up and log in, you can't trade. If you don't remember to look at the markets, you can't trade. If you don't know what strikes to look at, you can't trade, right? There's so many ways that you can fail under that old model. So now what we need to do is we need to do something different. So if we take this trade and we plug it back into Option Alpha, for example, we still get, and I did this literally seconds between each other when I took these screenshots a little bit ago. Like that was a couple weeks ago when I took these screenshots, but I took the screenshots seconds between each other. Okay, between that broker platform that I showed you and this one. If I plug the same trade into Option Alpha, I still get the same probability of profit. Exact same trade, right? Go back and forth a billion times, exact same trade. Now we know using math and technology and computers, we can run faster than you could calculate because you just can't physically calculate it fast enough because the second that you even could calculate, the pricing on the market has moved, the stock has moved, the underlying's down, we're closer to exit. Like you can't calculate it without computers, just physically impossible. But what we can calculate is we can calculate the alpha and the EV. And what we see is that this trade that we have been conditioned to try and take, right? Because so-and-so said this was a good trade, or XYZ person who posted said this was a good trade. The trade that we've been conditioned to take is actually negative expected value trade with negative alpha, which means that if you think about it as like a casino, in a casino analogy, this trade has an edge back to the house. So even though we would theoretically win 83% of the time, we're going to be slowly leaking funds out of our account because this trade does not cover the actual risk when it wins. And you can actually see this. You can just see it right here that the probability of profit is 83%. When you win $24, but when you lose $176. Now, it doesn't take a rocket scientist to do some quick math on that, right? And we do it here with expected value for you, but it doesn't take a rocket scientist to figure out that, hey, I'm not covering the risk that I'm actually taking. When I lose on this trade, I'm going to lose more than all the times that I'm going to win if I win. So if everything works out perfectly, I still lose money. This is not a trade you take. And if you don't know how to find trades like this, right? If you're not doing this math, which you can't do, then what are you doing? Are you just arbitrarily picking things? Do you have a strategy? There's no way that you could execute that strategy perfectly. And even if you find a trade that has positive expected value, how do you know that there's not something else better out there? Right? You don't. So you need tools to be able to do this. This is where technology comes in as a tool, as a leverage to be able to find different trades like this, right? So again, what we're doing right now, if you're trading under the old way, under the options trading 1.0 way, is you're trying to play chess against a 3D master computer. And what I mean by this is that every other system, brokerage, house out there, market making shop, you don't think that they're trading with algorithms and supercomputers? They absolutely are. There's not just 100 monkeys in a room trying to take all the other sides of the trades that you're placing. You are 100% trading against supercomputers and algorithms and machines all day. If you think you have an edge doing that, you don't, because if you try to play chess against the supermaster computer, you do not ever win. That, like, how could you? So you need something else, right? So what do? So number one is we still use our mind, right? So options trading 2.0, we still want to use our mind. That's the part that we don't want to get rid of. I don't want to get rid of it. I like my mind. I think it does an okay job most of the time, right? It's mostly rational, logical. My wife would say probably the opposite, but it's the strategic side. We want to keep that. And instead of giving our strategies and execution off to the pool, which doesn't do a good job, what we want to do is we want to hand over the execution strategies to bots. And bots are just another way of saying just a better operational trading system. Instead of just hoping and praying and like magically putting your hands together and saying, well, I really hope that this thing works out. I hope that I find a strategy that works. And I hope I remember to do it. And I hope I whatever. Right? I hope I can be at 10 places at one time, looking at all trades all day, every day. No, you just hand it off to a bot. And bots are just fancy computers that can run numbers and do calculations on your behalf. And they can do it much faster, much more accurately, right? Much more efficiently than you could ever do. So take your mind and marry your beautiful mind and your rational, strategic, logical side with a bot for execution. Let the bot do the execution for you. It's just that simple. And so options trading 2.0 is just all about understanding the reality of this relationship, that we can't be subjective for everything, that we need to be more mathematical, probability-based, systems-oriented with how we trade. And we let bots do the data-driven tactical implementation side of what we are trying to do, right? So let's explore how we can potentially do that here with trade ideas, right? So let me go over here. I'm going to share this. Let me actually switch here screens. I'm going to stop sharing that one. I'm going to share this one here for us real quick, guys. Okay, so right before we jump into what trade ideas are, let me just tell you kind of how it works, okay? So you get kind of an understanding of how trade ideas works, and then we're going to go through and just use trade ideas to start finding better trades, which is getting us over the biggest hurdle to begin with. It's like options trading 1.0 is just randomly picking. Options trading 2.0 is using math and probabilities to basically shop for a trade in a different way. So here's what we're doing here. So what is trade ideas? It's basically a new tool for traders. It's been around for a long time, but I don't know if I've really gone through it here in depth on the show. So that's why I'm doing it here. But the problem is that most traders, like I said, struggle to find ideas. And 99% of it is based on gut instinct, hunches, rather than data and probabilities. So we developed this tool that uses real-time data to pre-calculate and rank millions and millions and millions of potential spreads every 1 minute during the market hours, right? So think about this. All this tool is doing is running crazy, bananas, ridiculous math on millions and millions of possible combinations of spreads across all these different tickers in every expiration to allow you the ability to have a real-time database that sorts and ranks millions of trades so you can find what you're looking for that meet your criteria versus randomly walking in and going, I think I trade the 30 days. I think I trade the 30 delta. No, forget that. That's done. That's dead. That thinking is what got you here, which is you just don't know what to do. You're just randomly hunching and guessing all of your trade ideas that are coming out there. No, use data, math, and probabilities to figure it out. Okay. So that's the solution. And then the benefit, of course, is that you feel great about your trade idea versus shooting in the dark. And you can enter positions with built-in automations and exit management, all this stuff, which is, again, removing the fool from taking over and allowing you to offload management to a bot. Okay. So here's how trade ideas works, just so you know. And I'll give you an example of this. We'll kind of go through this together, but just like as like a process of how trade ideas works. And it does this every single minute all throughout the day. So like this process just constantly happening all the time. You can automate this. You can do it manually. Like you can look at it manually and enter manually. We'll kind of show you how you can do both here. But what trade ideas does is it loads hundreds of thousands of spread combinations every minute. Now that right there is a lot. So if you're looking at a stock like SPY, it will look at the 525 and the 526 and the 525 and the 523 and the 525 and the 520. Now, right there, if you're not looking at every spread combination and then comparing notes, which is physically impossible to do, you just can't do it anyway, then you're missing opportunities. You're absolutely missing opportunities because one spread might pay a little bit better than another spread right now, might have a little bit better probability of success or a little bit better expected value, right? But if you're not taking all those notes and comparing, which you can't do, you're missing opportunities to get into better trades. Then what we do is we filter insane bid-ask spreads, pricing anomalies, and impossible probabilities. We do a little bit of low-level filtering here. Like if something is, a bid-ask spread is $10 wide, like we'll filter it out for that run. And if the spread comes back down, then it'll be included in the next one, right? Pricing anomalies where you get like negative bids and zero bids on legs are just impossible. We'll filter those out. Same thing with impossible probabilities. Something is 100% probability and like calculates that way or 97% or whatever. We'll filter those out. We got to be realistic. The next thing that we do is we filter by position criteria, which this is you. This right here, position criteria, that's you. That's you as a trader. That's you telling trade ideas and the system what things you want to see. So I want this minimum expected value. I want this minimum alpha. I want this probability of profit. I want this max loss, right? That's you saying, okay, of all the things that I want, I want this, right? It's no different than, I don't know, if you're like buying a car or something, right? You're like, okay, there's all these cars that are available, but I want a truck and it's got to be black and it's got to be 4-wheel drive and whatever, and under 100,000 miles. Like, it's no different. That's how you're conditioned to shop for things anyway. That's how you should be shopping for your trade ideas. You should be finding trades just like that. Like, let computers and technology do the work for you, right? Versus you going out and having to manually calculate everything by yourself. The next thing that you do is you can rank those things. So once you have that list, you can rank things by things that are important to you. So it could pull up the list and then you could rank it by probability of profit or expected value or alpha or return on risk or whatever. And you rank that list so you can find good trades. And then finally, you can open a position. Now, you can open a position manually where you send a position, you find it, send it over, or when you get comfortable, you let the bot automatically open positions for you that meet your criteria. It's actually really, really simple to do, okay? All right, so let me share a different screen here. Let's jump into this. Hopefully this helps out. If you're watching here, okay, you should be able to see my screen popping up. Okay, so check this out. So this is trade ideas right now. Just going to refresh the screen so you can see. That's just updated right now, this minute. But ever since this morning, this is how many trades it's analyzed since this morning today. Now, we put this up here because we want you to see just how much work is going on in the background. Because again, there's no way you could do this by yourself, right? And you can see it's just updating as it goes. So every couple seconds as it starts reloading and analyzing more trades, it's just going to update here and show you how many trades it's actually going through. So you can see here that it's gone through today since the market opened, right? The last update was at 226. It's gone through and analyzed 68 million trades. That's 68 million trading combinations and possibilities. There's no way you could do this, right? There's just no way. Humans are limited. Like, our cognitive capacity has no way of catching up with this at all. Zero. And so now we're not going in and we're saying, okay, I need to find a trade. I think that I should go to this expiration. I think I should go to that. No, we're going to use this instead. So what do we want? We want a credit spread trade. You can actually put in the symbols that you want. So if you want to look at particular symbols, like you're only interested in SPY and you're only interested in DIA and maybe, I don't know, what's another one? Maybe GLD or something, right? Okay, great. So you apply that. And now you're just looking at ideas in only those 3 symbols. Or if you want to, you can use a watch list. Like, I have a watch list. I have different types of watch lists. You can create a tech watch list and an industrials watch list or trading ideas watch list, whatever. But you come in here and you say, okay, from my watch list, this is what I want to find. I want to find trades from my watch list. Maybe if your watch list has ETFs and stocks, you also click ETFs. So you say, look, I just want to find trades that are only in ETFs. I don't care about stocks, or whatever the case is. We'll come back here to the bullish, bearish, neutral, but let's go here. We're going to say, what about days to expiration? So find trades. And again, this is if you care. This is if you care. Let me stop here and say this. If you don't care about the other metrics, you don't have to fill in everything. Notice that every time you fill in something, the list updates for the most up-to-date information based on your filters. So if trading days to expiration is important to you, where you say, you know what, I want to find trades that are somewhere between, I don't know, 20 days and 45 days. Okay, great. Like, if that's your trading timeline, plug it in here and it will only look at trades that are between 20 and 45 days for things that are on your watch list, right? So now this is a completely different way of thinking about it, because now instead of going into the market, like I said, and just randomly picking and choosing stuff, now we're going in with like an objective, which is that we have criteria. We have things that we want to do with our trades, metrics that we want to hit. And only when we hit those metrics will we allow a trade to go through, right? Versus just arbitrarily picking a trade. You could do other things. You could say, you know what? I want the probability of profit to be 60% or higher. And I want the expected value to be $5 or more per contract. And I want the alpha to be 5% or more. And I want the return on risk to be 90% or higher. Now, I don't know about you, but like, this is a highly focused list of excellent trade ideas that you can start to work from. Literally a really good, highly focused list of excellent trade ideas that you can start to work from. And what you do is you start working down this list, trying to find trade ideas that work for you. So if you're like, you know what, I don't like any of these trades because they're all too bearish, I want a neutral trade. So you go neutral and you find some iron condors and iron butterflies that are in this list that also meet all this criteria. If you don't care about that, you untoggle it and you say, I'll trade anything that has good metrics, which is kind of like one way you could do it. But now you have a list that's highly focused. And now what you're doing is you're not going in and just arbitrarily picking something. You're going in and you're saying this right now. And look, like, watch, if we just keep updating this, this may not be the best set of trades in the next couple of minutes. I'm telling you, because I'm in here all day looking at this stuff because I just fascinate. I'm a junkie for it. But like, if you look at this all day, you'll see that these things will fall in and out of favor just based on pricing. Like, things will become better priced or not during the day, just depending on when you come in and try to look for a trade. But right now, the 396, 395 call spreads in DIA, and I don't know what's happened with, is the Fed spoken or not, I don't know. But right now, those 396, 397, 395 call spreads, those are the best trading opportunity based on our criteria for 20 to 45 days with a 90, at least a 90 return on risk, a probability profit 60% or higher, $5 of expected value, and $5 of alpha, or 5% of alpha or more. Like, I don't know what else you need. This is how you find better ideas, is you work from this list, which is technology working to your advantage to find these opportunities and surface them for you so you can actually get into these. Now, if you just look at this trade right here, just for example, okay, this trade right here, like right now, this trade has a 63% max $63 max profit, a $37 max loss. So it's a really low cost trade to get into, right? Like this trade, you're not going to get it. You're not going to break the bank on this trade. Very small trade, dollar wide spread, good trade potentially, right? You got to get filled on it. But even if you were closer, had some slippage here, it would still work. But the max profit, there's a 62% probability of reaching max profit. And there's a 33% chance of reaching max loss. Now, just think about that for a second. When you win, which is say around 60% of the time, you are going to get about $60. When you lose, about 33, 35% of the time, you're going to lose $40. And in between is going to be kind of like the floating area in between where maybe it lands in between those strikes, right? That's really impressive, where you can actually find a trade that has significantly better stats and metrics than the trade that we just arbitrarily took from the other side, right? Now you can feel more confident, I think, getting into this type of trade, because now you know what your numbers are and what your metrics are. You know this thing has a high expected value right from the get-go, right? Immediately has a high expected value. All right, let's do another one, right? So let's go in here let's clear out trade ideas, and let's find something else. Let's say that we don't care about anything on our watch list. Let's say we're super bullish. We don't care about days to expiration. And all we're looking for is trades that have 100% risk to reward ratio with over a 50% probability of profit. That's it. Oh, and we definitely want to have positive expected value. So we'll do positive expected value, right? Now, by default, it takes all ETFs and stocks. We are always filtering out earnings unless you want to include them. So you physically have to include them if you want to include them. But like, these are good trades right here. These are good potential opportunities that you can look at. Here's a trade in NVIDIA, right? This trade in NVIDIA right here, this one right here, is a short put spread. It's pretty close to where the stock is trading. I think NVIDIA is trading, like around 990. So it's right about where it is. It's got a 50% probability of profit. But if you win, you get $535. If you lose $465. It's still tilted in your favor mathematically, that you would probably cover the risk of the trade like this. Where if you would have basically like a coin flip trade like this, which has a 50% probability of profit, right? That's essentially a coin flip trade, except this time the numbers are kind of tilted in our favor. It's like we have a weighted coin that's working to our favor, right? So now that's a better trade than just a random 50-50 bet or a random trade that you would get into. Now you know that, okay, I'm getting into a 50-50 bet if that's what you want anyway, but now the coin is it's a weighted coin in my favor. It's a coin that I know works. You can actually see when trades are negative expected value too. So if I take off that EV filter here, you can see trades like the trade ideas is doesn't matter. Like we don't filter for perfect trades. Like we're just running the data for you. That's what this entire system was built to do, is just run ridiculous amounts of calculations and data for you to help surface this constantly. That's the new model of trading, the new way that trading should be, which is that use computers to your advantage, not the other way around, where you're just the manually inputting monkey that does things on your own. But you can see here that if I take off all these filters, like look how many bad trades are actually out there when I reverse sort this list by expected value. Now, look, some of these are actually in NVIDIA. So we found a potentially good short put spread trade in NVIDIA, but look at some of these other legitimately terrible trading ideas. This one here at the top right now, let's just refresh this. Let's see if this one stays up here. Yep, still up here. This one right here is 8 days away, has a 63% probability of profit, which is a good probability of profit. Nothing to, you're not going to quit your job on that, but that's a good probability of profit. But look at the payout. If you win, you win $2,037. But if you lose, $9,213. So even though your probability of profit is 63%, this is the problem with just looking at metrics like that, which is what most broker platforms include. They don't go the extra mile to give you some other metrics, is that you are missing a massive, massive amount of risk that you're taking for this position. Now, granted, not a lot of people are going to be taking a $9,000 trade. A single lot, one spread contract, $9,000. But this trade has so much negative expected value where the odds are just tilted completely out of your favor that you should never even entertain it. But you know what? Somebody is going to enter this trade today. Somebody is going to enter this trade today for sure, because there's lots of contracts and open interest for these strikes already right now. So somebody is trading this, and maybe they just don't know. Maybe they're just oblivious, or they're trying to hope that things work out, right? But if you're not doing this, if you're not going through and trying to figure this out, what are you doing? That's what I keep telling people. Okay. So let's go through here and we'll do this now automated, right? If I have some, and by the way, you can set some presets. So I've got a couple different presets that I can set if you are comfortable trading the same types of things over and over again, right? But if I've got some presets here now, and I like this, and now we're going to take it one step further, is now you don't have to just enter it from here and do all the manual work here, because we want to give you the ability to do this so you can find it yourself, understand it, get comfortable with the system, right? Get comfortable with technology and bots and automations. But now what you can choose to do is you can click this button up here and you can choose to auto trade. So once you set up the way that you like it in trade ideas, you click auto trade up here. You choose the top ETFs or whatever you want to trade, right? The things from this list that you want the bot to go through and potentially trade. Then you click next. You can say Kirk's new bot. You connect it to your live brokerage account, like my Tradier account, right? So now this account, if I were to make trades, this bot would directly trade in my Tradier account. And now you can see that all of the position details were basically pulled in from your criteria anyway. So we just said, look, all of the things that you want to do, now you want to shift it over to auto trading. Okay, let's go ahead and shift it over to auto trading. Let's just fill in all the details. Let's set some exit options, which is another way to automatically manage the position. Exit options are really cool because what you can tell the bot to do is you can say, look, if you get into a position, I want you to take profits at 50% or exit the position 1 day before expiration. Oh, and by the way, wait at least 1 day to avoid pattern day trading. So if you're a new trader, small account, you can click that box and that will ensure that it doesn't enter a position and exit the position the same day, because you don't want to get flagged as a pattern day trader, right? So that's it, just one click box instead of you having to remember to do that yourself. Then you set your exit options. Now you just double check all your criteria. You can add additional stuff here, but here's our criteria, right? Expires before the next earnings event. Yes. Expires before the next ex-dividend. Sure. Maybe expires before the next FOMC meeting. So if you want to do that, if it's important to you that no trades go over the FOMC meeting, the next FOMC meeting coming up, then you just check that box. And this is no different. I tell people this all the time. Like if you order food online or anything online and you just have like a checkbox of what you want, like if you order Uber Eats or whatever, right? You're like, I want the salad, no tomatoes, I want Italian dressing, no cheese, and cucumbers. Like it's just a checkbox. Let technology do what it does best. which is find all the trades that meet your criteria and then execute them. That's it. But that's what it does best. You're the instructor, you're the commander, you're the coach, you're the general, you're the person in charge. You're telling it what to do. It's not choosing randomly what to do. You're telling it these are the important criteria that I have to have in order to get into a trade. Expected value per contract greater than $5, risk to reward greater than 100%, probability of max profit greater than 50. And I would do something like this, which is the max loss is less than $500 a contract. And that to me ensures that I don't get into any positions that are really, really big. I want small position sizes so I can get a lot of trades. Now, if I have a lot of opportunities available, if that list is still long, then I want to rank by alpha. And we went through this in a previous episode here, so you can go back and look at alpha and why we use alpha and how we use it. But that's how you would do it. You would just say, look, if I have 50 opportunities left over and all 50 meet this criteria, how do you determine which one to actually use? And you could just say rank it by alpha. And once you do that and all of your stuff is filled out, you literally hit create bot. And the bot is now created for you. The bot is created for you. It has all the criteria in here inside of your automation. You can tell it when to scan and what symbols to use if you want to use different symbols, but all that information right in here already. It's all built for you. So you don't even have to do anything. And all you need to do is just simply turn it on. That's it. And then it will start running and start finding trade ideas for you once you want it to start doing it. I already have bots running that do that, so I don't need to have it on, but you just turn it on when you're ready to go. And now what you've done is instead of you arbitrarily and subjectively picking different things out there, saying, I think I should do this, and I think I should do that, and I think I should do that. No. Now what you've done is you've told a bot, hey bot, go out there and look for these types of trades for me specifically. All day, every day that meet my criteria. If you find one, get into it. But it's got to meet my criteria, right? And when you get into the trade, then once you get into it, I want you to use these exit options right here to manage the trade. And now you've done full trade management, front to back, start to finish, entry to exit, the whole thing. You're still in control. You're still the general. You're still using your mind and your rational, logical, strategic side, right? But now you're using bots to take over the management of it. And that is what options trading 2.0 is all about. It's about removing yourself from being the bottleneck in the system so you can allow a bot to take over the management of your trades, right? And take over the execution of your trades so that you can elevate yourself to a higher level of thinking. So that's basically what options trading 2.0 is. I hope you guys really enjoyed this today. That's where we're going to wrap up. So thank you all so much for being here. If you do have questions, let us know. If you have any other thoughts or feedback, again, just let us know in the comments. Have a great rest of your Wednesday, and I'll see you on the next episode.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member FINRA SIPC.